Hi, this is Monday the 4th, and this is the SPX Outlook for the coming week. And this is going to be hectic as it has been for a while, so let's try and make some sense of this market. Last week we had an excursion north of this strong fib resistance that may have surprised some of us. It certainly surprised me. But overall, it just hit a very strong resistance on 2967 or so, as shown here by this reddish resistance level. The market then dropped for any odd reason, including Elon Musk and reaction after the GDP and FOMC. This excursion was awful, but back below 2930. I mean, it made a bit of sense, if any sense can be found in this market. So what did it do? It actually fell all the way back to the 2815 area where the pivot is, and now we will see whether the market stays in this range above 2810 or falls towards this strong support, which would be 2650. Possibly, as you can see, there's a mid-range here about 2730, which was a support not so long ago. So let's now see where the market decides to go. I would assume, since it's quite oversold, it will try and go higher and could actually plot some fibs here to probably see the 2855, 2860 could be another resistance, short-term resistance. If we look at the 1 hour chart quickly, the 1 hour chart of course shows this excursion, and incidentally it looked also like it tried to penetrate this upward channel, but we will look at it later on again. So it went down to this channel boundary where it stabilized for a while, and then it went for a stronger support around 2810. And again, we can only hope it's going to be maintaining this price action north of this level for now. And I mentioned earlier fib, so let's plot quick fib here. Incidentally, 2850 would be a test level again. So we may see, considering volatility is still very strong, with a daily move, a 1SD move above 40, 45 points. I mean, this is really just around the corner by today's standards. So this is what we can expect. And of course, if the market then chooses to test it again, even break there, we cannot discard the scenario where we would have some heavy selling all the way down to 2695, 2700, or even 2650. Let's stay on alert for now. Okay, now lastly, a look at the daily chart for a longer term outlook. The daily chart where I've plotted my upward channel with different boundaries, we can't really trust one single boundary because of the very strange volatility. We have seen resilience of volatility, which is unusual, or I would say it's more sticky or more resilient. The volatility has stayed much higher than we would have thought after the market recovered about 2/3 of the fall in March. So this is a little bit strange, and I invite you to maybe watch the video I made on Gauge to see how really weird volatility has behaved recently. So for that reason, I have plotted different channel boundaries, and this one seems to be the one that is active right now, and it could be even a lower one. What we can see is that market seems to be peaking. It's looking for reversal. The momentum is maybe a bit strong. The key levels 28, 10, 15 is still there, preventing for now the market from falling to, as I said, something which could actually be closer to this type of channel lows or lower. So we will probably see this bullish congestion, but we have those signals of the market trying to reverse south. So we'll have to be very careful over the next few weeks of the market. If it fails to recover, sellers may actually come back to the fall. Let me delete this. So the takeaway is probably the same as in previous weeks. Quantum gaps or multiples of 40 points. I would still suggest you watch for those lines on short time frames, 4-hour daily, and see how they move. I mean, the daily chart is definitely pointing for a pivot that is much lower. Pivot is actually now on 2500. So we're definitely not out of the woods. I haven't traced a fib expansion going south, but this is something we can look into in the next video, where I'm going to talk about current positions. Of course, it's a bit of a fight against time. Time is supposed to be producing theta for us, but it's actually quite complicated at the moment, especially because of the very weird volatility behavior that we've seen in the last month or so. So what we hope for is that the market will in the coming week will stay north of this pivot, which is a shorter term pivot. Volatility will remain high, which means that whatever premium will probably be cashed in late in the trade. And if the market drops, then we would be probably confirming that fib downward pattern. So we will be careful. I will plot it, but you can already plot it if you want. At this time, there's no indication. I will watch this channel lows and maybe even this one as confirmation. So 28.10, 28.15, or maybe 27.95. Nothing is very precise in this market. So to close this SPX Outlook, we're back to the 4-hour chart. The daily chart looks like it's ready for a reversal that is not picking up momentum yet. The 4-hour chart is oversold and could really point higher. I do believe the daily chart will weigh on the future of SPX, but for the time being, let's see how those key levels hold. And for those who want to plan longer term, I would say be a bit careful. The rejection of the strong fib here is also a bearish sign. Thank you for watching. Next video will be on our positions, and bye for now.